to Just Ask Freeman. My name is Cynthia DeFazio, joined today by Freeman Owen Jr. He is President and CEO of Financial Sources Incorporated. Freeman, how are you today?
Just fine. Glad to be here. You know, we were talking about that tax toolkit.
Yes.
We got so many calls on it. The show wasn't long enough.
Yes, Freeman, I'm so glad that you brought that up because people had so many questions about taxes. They loved that show. They loved that 30 minutes that you did that deep dive into tax planning. But I think for the viewers at home that maybe didn't see it last week, we need to talk about it a little bit further. Let's talk about that toolkit.
Yeah, let's put some thought into determining the distribution from our tax qualified plans.
Okay.
I do believe that what we should do also is to look at the distributions from these tax qualified plans over a 2-year period. But here is one important, I should say, solution that I have in coming up with tax-free distributions.
Okay.
But there's one more thing. There's a little stumbling block when it comes to getting certain, let's say our Social Security. One of the things I try to do is make sure that we can get our Social Security benefits without the second go round of taxation, because we pay Medicare and Social Security taxes as a gainfully employed person. We try to see, we don't want the taxes on that Social Security. If you're in a higher tax bracket, and audience, I don't know whether or not you've heard of IRMA.
Yes.
Okay, that's an additional tax or surtax that is applied to your Medicare Part B. That's another obstacle. See, we accept the challenges. I've seen them come in the office and say, "We're here. Just ask Freeman." You know, and we're going to cover that, how the people are accepted and received in our office. But the thing is, there is a very important piece I like to elaborate on.
Okay.
The Roth, or traditional IRA, conversion to a Roth IRA.
I'm glad you brought that up, Freeman.
Yeah, because see, Cynthia, some high-income earners cannot qualify to contribute to a Roth. I got a solution. Just ask Freeman. Here's what the solution is.
Okay.
If they have a 401k or TSP or some type of employer-sponsored retirement account, when they roll it over, we can have partial distributions over a period of time to a Roth IRA.
Okay.
Okay, for those high net worth people, those folks who have $250,000, $500,000, or $1 million plus that come to see me, they say, how can I get a Roth? I can't contribute to a Roth because of my income. Again, I got a solution. Just ask Freeman.
Absolutely.
That's what you do. And they ask me, and I come to the rescue because I got a solution.
Yes, you do.
Yeah, when we do a rollover, we can take and partition, or I should say, a partial withdrawal. Now, the thing is now, you got to understand, audience, viewers, we take a little small withdrawal each and every month or quarterly or semi-annual because we get taxed. We're taxed in the year. We convert that traditional IRA to a Roth, and we can spread that distribution, or I should say, over many, many years.
Okay.
The benefit? Tax-free distribution.
Wow.
Now, suppose I've done this. We take a 60-year-old. He or she has $500,000 of even a 401k or TSP. There's a process. You roll it over to your own traditional IRA. I always say, don't eat the elephant or that lump sum in one bite with taxes that is applied. You'll get indigestion. So what you got to do is take a small withdrawal from that traditional IRA, because you have control now.
Okay.
All right, monthly, quarterly, semi-annual, or annually. And we're going to talk about the Secure Act, audience, but that's another show.
Another show, yep.
and spread that distribution over time, because we're taxed in a year we take the withdrawal, and minimize our tax bite. Rather than you roll over $500,000 and convert the $500,000 IRA to a Roth, you're in trouble. $150,000 tax bite.
Wow.
Minimum. Okay. So what we do is we help our clients. We got to pay taxes, but we want to have tax efficient. And I put a lot of emphasis on distribution. You know why, Cynthia?
Why is that?
My clientele is 55 years old, all the way up to 100 years old.
Okay.
Okay, 90s. Protect that principle, reduce taxation,
Okay.
and have strategies such that over time, converting that traditional IRA to a Roth, a small distribution each month or each quarter or semi-annual, once a year.
Okay.
Pay the taxes for that distribution in the year. We convert that investment to a Roth. I've set up tax efficient plans such that at age 72, well, now it's been kicked up to age 72 to start taking RMDs, required minimum distributions. No RMD.
Wow.
See, and that
That's
puts
amazing.
you put your client, I mean, it's like, that's what I'm supposed to do. Have the best interests of the client, tax efficient plans
Yes.
on distribution.
Yes.
It took you a long time, folks, 25, 30 years to accumulate a nest egg, and your concern now is like, I've contributed to these employer-sponsored retirement accounts.
401k, 403b, absolutely. Thrift saving, let's talk about that.
Exactly.
What happens?
And see, and there's restrictions on the employer-sponsored retirement accounts, not only for you, but for your loved ones and your beneficiaries. And that's another, I tell you, we got so much stuff that we can give to our viewing audience, and all they have to do is what? Just ask Freeman.
Just ask Freeman.
And take control. As a matter of fact, go to that barcode. And what's your favorite saying?
Claim that spot, Freeman.
Claim that spot to know about distributions. Anticipate larger distributions over the first 2 years of your retirement.
Yes.
And we'll put into a plan so that we'll have a tax-efficient plan, how to deal with Roth conversions, a little small steps at a time. And we can get to the point that we have so much of the traditional IRA converted that those, what has been converted to a Roth, there's no RMD. You might want to take the distribution on, like I said, have several contracts or several streams of income, and then on the back end, lower your tax bite. Why? Because you got a Roth.
Yes.
You're not subject to the RMD age. I just had to add that.
Well, Freeman, I am so glad you did, and this is the perfect time for us to let the audience just ask Freeman. You're in the viewing audience today, and we realized that you had a lot of questions about tax planning. Freeman and I decided to dedicate today's show, the first segment, to all about that, tax planning, things that you can do to make sure that your retirement nest egg isn't given back to the IRS. That number to call is 833-414-7233, or if you don't have your pen handy, go ahead, grab your smartphone, click on that QR code at the bottom corner of your screen, and you can claim your spot with Freeman accordingly. We're going to take a very short commercial break, but when we come back, we're going to talk about if you have claimed one of those spots, what happens next? What does it feel like when you come in to meet with Freeman for the very first time? Stay tuned.
I was a student at Howard University and was transferred over to Federal City College at that time. I got a couple degrees in mathematics and statistics. I worked as a mathematician, mathematical statistician, climbed the ranks there, reached the pinnacle in my late 20s. This opportunity in the financial services world spanned it now over 40 plus years. It all started with me having an interest in mathematics, science, technology, and engineering. Started in the business, got licensed. I didn't have any fear. Let me share a personal story. I've been married to the same lady for 51 years. When I quit working as a mathematical statistician, she says, well, you've been successful in everything else. I'm 27 years old at the time. You'll be successful in this. And there was no looking back. I'm not the type of person that could work a job per se. I had to have, and a quote, I got this from a great mentor, freedom with responsibility. Because I always say, if you do this, you get nothing back. But if you do this and give, blessings flow. And that's basically how I started in this business and how my career started. Well, I have two careers, the first one and, of course, this one, which I love the best.
Welcome back to Just Ask Freeman. My name is Cynthia DeFazio, joined today by Freeman Owen Jr. He is President and CEO of Financial Sources Incorporated. And we're going to take some time right now and take a look at what it feels like when you come into the office for the first time. So Freeman, you're so passionate about helping people retire with confidence, retire with peace of mind and with clarity. So often people focus in on that accumulation phase of life, but you don't. You take that retirement nest egg and you make sure that people can have that income plan that's going to let them have peace of mind throughout their retirement years. Where does that passion come from?
It's deep inside. The prosperity that I've seen with my clients, it's 4,000 folks over my career. Yeah, plus,
that's a lot.
Since I've been on TV, you added another 300 to 500 folks over the last 5 or 6 years.
Wow.
And to see the joy and the pleasure of having and security, when I finish with them, let's take the initial meeting.
Yes.
They come in the door.
Okay.
Now, first, what they did, they just asked Freeman. They know that I'm going to have some solutions. It started right here in the show, and matter of fact, with you several years ago. All right, they came in.
Absolutely.
Well, we saw you on TV, and you mentioned you mentioned the fact that we're educated, but we're never privy to financial literacy, literally.
Yeah, it's true.
Okay.
True.
They come in, my administrator's there, they want coffee, make them feel real relaxed, have them sit down, husband and wife, and it's all about them.
Yes.
Now, I introduced myself because I had the fiduciary responsibility to look out for their best interest.
Sure.
And I tell them, if you're looking for mutual funds and stocks and precious metals, I don't have that. So there's no use going further. No, you said, Freeman, how to help us with our rollovers and 401ks. You mentioned the fact that we can, what do we do? Are we safe? Will our money last?
That's the big question, Freeman. I know you get asked that a lot.
Will our money last?
Yeah, it's a big
and
one.
in my mind, Cynthia, that's all I think about, is making sure their assets and their income lasts longer than them. I tell them. And we just have a nice time. And another thing, too, I get into and ask questions about their family.
Yes, very important.
Husband and wife there. I said, well, how long you guys been married?
Yeah.
Oh, man, we've been married 30-some years. Do you have children? Yes, we do. Do you have grandchildren? And then I kick them with this, too. I said, now, are your children, now they're adults, are they dependent, codependent, or totally independent?
Ooh, good question.
Okay.
Yeah.
Because a lot of times in the present economy, if we have adult children, they have a difficult time even acquiring affordable housing.
That's
true. So the boomerang effect comes back.
Absolutely.
So what does that do to that couple that's sitting in front of me?
You're right.
It takes a toll on their retirement income.
Of course, because they want to help their loved ones.
They want to help their loved
Absolutely.
ones. Okay, so, our kids are independent. That's great. Now, and I tell them, it's all about you. And we tell a joke or two, and then we get serious about income and tax planning, like we had mentioned in other segments of this show. And another thing, too, is I want to make sure that they are familiar on how much they're spending each month. Sometimes there's no budget. Well, I got automation, and AI, and everything else, this technology.
Yeah.
We figure out their spending habits. How much is the mortgage? How about utilities, transportation, food, cable? And I plug,
Amazon?
I love it. Yeah.
I mean, do
Amazon,
we have to factor that into?
No, we factor that in. One-day delivery of all the different
Do you have
types of
Prime?
items.
Do you not have Prime?
There you go. You got Hula. So we discuss those kind of things. And all of a sudden, the relaxation.
Yeah.
Because I tell you, what I've seen over the years is that these folks are looking right in the eye. And I initially tell them, I say, well, you're here, and I just want to thank you so much for your trust, not your business.
Wow.
And they really see the sincerity in that.
Because you care.
Yeah. And these are grown folks.
Yeah.
You know, they're lawyers or whatever they are, and physicians. Some of them are high-ranking in federal employees, private sector folks.
Yeah.
They can tell you whether you're genuine or not.
Oh,
and you
most
have their
definitely.
best interest. And that's what I put a lot of emphasis on over the 40-some years I've been doing this business. The clients know that when they sit down with me, it's all about them.
Yes.
And I'll say things like, okay, now we got our budget. Something else too. When I find out their ages, I say, okay, they haven't taken their Social Security benefits yet. So I want to make sure, and here's the hard question for them. Okay. When do you plan to retire?
Ooh, that's a great question.
That shakes them up a little bit. They don't have no clue.
Yeah.
Why? They need a financial professional to put them in order, like me, so they have a systematic strategy on taking distributions from several different investment accounts.
Makes sense.
All right? And while we're doing that, minimizing their taxes.
Yeah.
That's a big thing for them. And so they ask, will my money last? And I look, and then maybe their portfolio has $1 million, $1.5 million, sometimes $2, $3 million.
Yeah.
And I say, well, what we're going to do, we're going to develop a strategy, minimize taxes, increase your income, and here's some other factors we take into account. Inflation. Everybody talks about inflation, but a loaf of bread at $1.02 in 2000 now is almost $2 today.
You're right.
Gas prices and so on.
Milk.
That's right. Food.
Yeah.
It increases. So I really focus on income planning by minimizing taxes, looking at a budget, coming up with reports, and don't inundate us to the point that they're intimidated. These folks are relaxed. And there's Social Security reports so they know when to file, how to avoid costly mistakes, Cynthia.
So important.
Oh, so
Freeman.
it's so important.
Absolutely.
And how to maximize the Social Security benefits, because what it is, they work so hard
Yes.
paying Medicare and Social Security tax. And then I find out a way, once I get my software and I do the report for them, I say, well, you may have to pay taxes on your Social Security twice. This will be the second time. But I look at all the various assets they have, and you know what they bring? I ask them to bring the paperwork there that I need, documents from various brokerage firms. There are documents that they have with savings accounts or accounts in the credit unions. All those come together, and their Social Security statement. Because this is a true story. Once in a while, you get a person or a couple to come, and they have they didn't bring anything, and they were asked to. Their TSP document, their 401k. So I tell them, I say, well, I lighten the load a little bit. I open up a folder and I say, it's lonely. We're working in the cloud. But I talk to them and have them be at ease.
Of course.
And then they come back they bring their documents that we need. We have to work with those documents, because
Sure.
from those income producing assets, that's what we work with. Now, I know we got to take a break.
We do, Freeman. This is our second commercial break.
Gosh,
Love to let you take that away.
All right. Claim your spot, folks. That's all you have to do. Just ask Freeman. Take your camera, your iPhone, Android, it doesn't matter, and scan that barcode and schedule your complimentary, matter of fact, not complimentary, your free consultation. Do that today. Call us at 833-414-7233 and get your free consultation, and get someone here who's an advisor that looks out for your best interest, and you enjoy the comfort and knowing that you have a written, tax-efficient plan to guide you through. And again, I'm going to repeat that number, 833-414-7233, and claim your spot. Just ask Freeman. Just that simple. And I can't wait to chat with you.
Freeman, thank you so much. To our viewers at home, as you can see, he is purely a joy to work with. That number, 833-414-7233. This is your opportunity to claim your one-on-one spot with Freeman today. If you don't have a pen, you can grab your smartphone, click on that QR code at the bottom corner of your screen. That will take you right to Freeman's landing page, and you can claim your spot accordingly. We're going to take a very short commercial break here on Just Ask Freeman, but don't go anywhere. We're talking all about what it feels like when you become one of Freeman's clients. Stay tuned.
I just love what I do. I don't see it as a job. It is a wonderful opportunity to be able to help others, because I always say, if you do this, you get nothing back. But if you do this and give, blessings flow. First, I look out for their best interest. I ask a lot of questions in reference to their needs, their concerns, and they feel freely to discuss the particular financial services that I can offer them. But you might not have the financial literacy when it comes to wealth distribution, legacy, have guaranteed income for life, healthcare. All that good stuff, man, is there for me. I have knowledge of, and I can help the clients avoid big mistakes in the financial world and understand the concern that I have for them. There's no romance without finance.
Welcome back to Just Ask Freeman. We haven't stopped laughing during the whole commercial break. My name is Cynthia DeFazio, joined today by Freeman Owen Jr. He is president and CEO of Financial Sources Incorporated. And what's that you say, Freeman? There's no romance without finance?
There's no romance without finance. There's no fun without monies to enjoy. And I mentioned this too. My wife has been retired for a while, and I've got a lot of folks who, based on the tax-efficient plans that I've designed for them, their Mondays through Fridays are their Saturdays.
That's amazing.
And I, it's just exciting to see my clients in Dubai.
Yes.
They're in Bora Bora. They're taking vacations 2-3 times per year. Their homes are paid off. We plan for that years in advance. You see smiles not only on their faces, but on their adult children's faces, because they know that we have designed a plan. That's something else. What we do when it comes to that office is as follows. We have annual reviews.
That's fantastic. Very important.
Because I've seen the documents or the statements in which the clients have started investing, say, 1980.
Okay.
All right. And they'll say, I haven't seen my advisor in 15 years. Well, I invite annual reviews. Okay. Here's a good example.
Okay.
When the client has not taken their Social Security benefits and they're closing in on the eligibility ages,
okay.
60, 62, 66/67, and 70.
Okay.
And I've seen them. Now, when I do the review, I've already kind of planned early on, many years in advance, when to take and file for Social Security benefits and the consequences of filing for their Social Security too early or prematurely. Let's say 62. They know that if they take the Social Security benefit at 62, it's going to be 30% less for life unless they pay Social Security Administration back that first year. You only get one shot.
One shot.
To pay back the monies that you receive from the Social Security Administration, that benefit.
Okay. So one boo-boo, that's it.
One boo-boo, that's it. So we planned for that in the early stages, and we talked about that initial meeting, and then the subsequent meetings.
Okay.
We have the tax efficient reports, the printout, technology, when to file, how to avoid costly mistakes, full retirement age, and what happens at age 70. Now, there have been people, when I asked for the Social Security statement, they said, well, I've already taken my Social Security benefits. And I said, well, I need your date of birth, of course, I'm fact-finding. They're 62, and they're 64, and they've received their Social Security benefits over the last 2 years. But when I do a printout and I show them, I say, well, we're going to have to compensate for the loss of that 30% because you prematurely took your Social Security benefits.
Oh, wow.
Now, Cynthia, I make sure if there's an income gap between 60 and 67, and they have $500,000, $1 million in assets, we're going to minimize the taxation, and we're going to make sure that they file, even in the year properly, they turn 67, because there are consequences, and there could be, when I say consequences, if you prematurely take your Social Security benefit prior to, or in the year you turn 67. Shall I give you an example of that? Oh
my gosh, we have less than a minute left, Freeman. We have to give people the opportunity to work with you.
I tell you,
Let's
you
do
know
that.
what? Get your spot right now.
Yes.
Just to ask Freeman, because I have solutions for this financial literacy that you need. Just ask Freeman. Call us at 833-414-7233, or take your iPhone or your Android phone, take a picture of that barcode, and schedule your free consultation. I want you to do that today.
Freeman, thank you so much. To our viewers at home, thank you for spending time with us today on Just Ask Freeman. That number, 833-414-7233, to claim your spot today. Be safe, be happy, and be blessed. We'll see you back 1 week from today. Take care.